Hello, everyone. This is Drew from Best of Us Investors, working with Mark on the Platinum Trading Platform. So, again, Mark has been in the investment field for over 40 years now and has worked as the director of operation for an online firm for about 10 years. As I mentioned before on our previous videos, he will be doing overviews on what he saw in the market and charts from the previous week regarding swing trades, and also share some of the stocks he's keeping an eye on for swing trades for the upcoming week. Now, for real-time buy-sell signal notifications based on 7 indicators and insights on stocks that are setting up for great trades each day, along with educational videos on how to read charts, come join our Platinum group and let's get through this tough market together, seeking for great swing trade opportunities and even for great potential entry points for long-term investments as well. So make sure you check the link in the description below for the Platinum membership. And I just wanted to remind you that this video is not made for financial advice, but for educational purposes only. So Mark, how was the market last week, and are there any major stock trades that you would like to talk about?
Well, as you know, the markets are very choppy, especially last week. Whenever a Fed official comes out or a bank chairman or an earnings report comes out, everyone seems to jump over. Markets go up, markets go down. We look at the pre-market and they're down 200-300 points. And then by the end of the day, we're up, 600 points. So there's a lot of swing, a lot of volatility in these markets. And it just seems like everyone's waiting on pins and needles for somebody to say something and tell us that the Fed is finally done hiking interest rates. And from what I have heard from the Fed, they're not done, and they're going to keep hiking until they see inflation go away or down to 2%. So it's really tough to be an investor or a trader these days with such big swings and daily swings on the candles, which, you can see price action way high and way low all in one day. So, if you're day trading or swing trading, I would put in stop limits to make sure that you maintain your margin of profit that you would, like to have. We find it's hard to find good swing trading candidates, but money does move. Okay. And right now we were in Campbell Soup for the last 5 or 6 days. And if you follow us on the Platinum channel, you've seen our journey, and we actually bought a position on the 13th of October. And then we did a strategy of actually breaking it up. When we sold the first half of our position, and then we sold the next quarter that was left. And then finally we got out the other day with our final quarter position. So we can see this, it's tracked in the Platinum channel on the platform channel of the Platinum, which is available for our Platinum subscribers. And we can go look at a chart, or we can go look at the worksheet too. But let's go kind of look at the chart for Campbell Soup and what we did this week. Okay, so here basically is the chart of Campbell Soup, okay, and it's the symbol CPB. Now, these aren't exciting stocks, but you look for setups and you can see that Campbell Soup was trading above the 200-day simple moving average, and it started to trade above the 9-day simple moving average. So right here would have been a great spot to get in, but we didn't get in early enough. And then you saw a little bit of a delay here on the 50-day moving average. And then we had that big swing day a week ago, Thursday. And this is where we actually got in. We got in our position at $49.01, and that's represented by this line right here. Okay. And basically, we closed half of our position on the next day, which is right here. And you can see a resistance line right here. So we closed half of our position at $50.33 on the 14th. Okay. And the reason was there's so much volatility, and you can see that the wicks have gone down. I set in a stop limit at this position. Now, on this day, it went up to 51.17. So I thought I set a stop limit that was safe, but it came down and hit at 50.33, and I was glad we still have half a position left. So then we went to the 17th, and at the 17th, we also had a crossover of the slow scholastic, you can see right here, and we had a little bit of a dip down in the RSI. And that, although these aren't all our guidelines, these are 2 of the main guidelines that we watched. So we put in and sold another quarter of our position at $50.37. So basically 4 cents higher than we sold prior. So we're up, 2.77% in this trade in a couple of days. So we continued on, and then on the 19th, which is right here, you can see we popped above resistance. We put in another stop limit. And because we're seeing sideways motion here, you can see we're going sideways. We put in another stop limit and we got out at 50.69. And at the time, that was the resistance level, was 50.69. So it went up, came back, hit resistance, hit our stop, and we were totally out of this trade. Then the following day, you can see what happened. We went all the way down and we closed at 49.88. So this got us out. This is our average right here, which is $50.43. So we've gone from $49.01 to $50.43. So about $1.43 we made on this triple trade down. You can see we're right in the middle of the box and we're out. Here's today's action. The market's not closed. This is Friday. And you can see we're still down a bit. We're still above where we bought in, but we saved ourselves and we're glad to be out of this. The market is very volatile. So another successful trade for us, because you're seeing down here that in the histograms on the MACD, we're starting to come down even though we haven't crossed over. But also we have a crossover in the slow scholastic and we had a bit of an RSI drop in the momentum. So you could stay in a trade like this. We're still just touching the 9-day here, but if this dropped below the 9-day, it'll probably drop a lot further. So we're out. We made about almost 3% in about 4 trading days. So I'm happy with that, with the way the market's been. So money goes somewhere, okay? It just doesn't go static. So you look at the market and where money has been lately, there's 11 sectors of the S&P 500 that I monitor quite closely. And energy has been the sector that we have found the most success. In fact, the XLE, which is the energy sector of the spiders, you can see a chart right here, has basically been above the 200-day simple moving average since the beginning of October, and it continues to go up. So in energy, you can see the MACD is still separating from its signal line. We have a crossover on the slow scholastic, and the momentum is up. As oil prices go up, so does the energy industry. And so that's what you're seeing here. Very volatile to be in something like this, but there are some stocks within this ETF, such as NFE, okay, which is New Fortress Energy. You can see what's happening here. We're above the 200-day simple moving average. We just crossed, and now we're trading above the 9-day. So basically, that would signal a trade. We're seeing a crossover on the MACD. We also see that we're rising on the slow scholastic, and our RSI momentum is also rising. And here's the 50-day simple moving average. We can get above that. The next line is resistance up here, and we may find resistance here, but you can see this is a trade where we're in a bear market in 10 of the 11 segments, but there's still stocks within these segments that we could still make some money on through swing trades. The other areas might be defense, okay, and there are certain companies within defense that also look good. This is General Dynamics. You can see General Dynamics is trading above its 200-day moving average now. It jumped up here 4 days ago above the 50, but now we're hitting right on resistance. But again, this is another company within a bear market, within a bear industry. The aerospace, this ETF is still below the 200-day moving average, but here we have General Dynamics. You can see we're growing on the MACD, have a bit of a crossover here on the slow scholastic, and we have momentum on the RSI. Crossover is probably because we're hitting up against resistance, so we'll have to watch that. I wouldn't get into this trade right now, but you can see that over the past week, there are areas where we could be trading in and out of these stocks. The last one, let's look at food industry, which you don't think is exciting, but we were just in Campbell Soup. So let's look at Hostess brands, which is TWNK, and everyone loves Twinkies and Hostess cupcakes. And you can see this chart just in the food industry. We're above the 200-day moving average. We're above the 50-day moving average. We're above the 20, and you can see we're bouncing right on the 9. We're up against resistance. Here's our sideways motion again. But get in, and again, here was a wick that goes up and hits resistance. But over the long-term trend, this was a slowly moving nice company. You would have gotten out here because you're underneath the 9. You got back in here, gotten out, and then you're up. If you would have gotten in here, you'd be up $24. You'd be up 86 cents. Now, it doesn't sound like much, but in a down market, finding stocks like this in the food industry are good, steady gainers, and they don't have a lot of volatility that you see in some of the other stocks like Tesla, Microsoft or Apple or Netflix. So let's talk a little bit about Netflix, because Netflix came out with their earnings. Everyone's very excited about it. And that was 4 days ago. And then the stock went up. Of course, we have a big gap right here. Stock went up, and then we hit the 200-day simple moving average. We're trading above the 50, the 20, and the 9. You can see we also have a big move up in the MACD, and you can see that the slow scholastic is moving up, and we're just about at the overbought point in the RSI. But here's the main thing: is these lines act as resistance, and once this gets and closes above the 200-day simple moving average, that's going to be a difference maker for Netflix, and you might be able to to get into this, I'd want to see at least a full candle close above the 200. That would take this stock from a bullish trend to more, or bearish trend to more of a bullish trend. And then with resistance line way up here, there's a potential for some good rises in here. Of course, these markets today are not the normal markets we're used to. So you always have to set your stop limits if you decide to get into something like this. And also, be observant of the RSI. But RSIs can run along the overbought signal line for a long time before they go down. So this is just something we'll be watching is Netflix in the future here, just from a chart point of view. This is in the energy business. This is EOG. This is EOG Resources. And you can see the same thing. 3 days ago, we closed one candle above the 9-day simple moving average. We're above the 50. We're above the 200. We're above the 20. You're seeing nice positive trends going up. You see the slow stochastic is crossed. You can see we're rising from the MACD signal line. And we also have good momentum. Again, this is in the energy section. Resistance line looks like it's up about 140.79. We're currently trading at 135.50, so there's some room to go up. Again, energy is very volatile. It goes. Someone can start a war. Someone can open up, more pipelines, or someone can drop more oil from the strategic reserve, and that can cause this to be very volatile. So if you get into energy, make sure you have your stop losses in to preserve your gains. But again, the chart looks pretty good. So you got to remember that with Campbell Soup and stocks that we look at, you might not think that 2.5–3% is much, but we're doing this over a period of 4 trading days. Okay, and there's an average of 250 trading days, a year. So you're making 2.5% every 4 days, and then you multiply that, by the number of trading days, you're making quite a bit of a percent. So remember the long-term annualized, you're making nothing on your money right now, and your stocks may be down 35%. But if you can get 2.5% on a portion of your portfolio every 3 or 4 days, that adds up over a year's trading. Over the trading time. So just remember that. We're not going for home runs here. We're going for singles and doubles.
So Mark, thank you very much for your insights and overview on the market. And I've actually learned a lot again from this episode. And I learned that even in a severe down market, if you know how to read the charts, we could actually do some swing trades to make profits. So I think not just myself, but a lot of people who are watching this episode has also learned a lot. So thank you very much again. And for more details and updates regarding swing trades, chart analysis, and stocks we watch each day that are set up for great trades, make sure you join our Platinum group. And again, let's successfully invest and make it through this tough market together. Thank you very much, and see you all next week.